Yes, so last time we came here, so they have to be subject to pay every time they receive a paycheck from us, okay? So what we did was we got to take a look at how we calculate federal income tax withholdings. We got to see what FICA was, which is Social Security, and Medicare. And those are the only things that I want you to know for the exam and for so on so forth, because every company, right, will have their own benefits and will have their own deductions and will have the list of what they want to take out for each paycheck. So every company is going to be a different case. Some may have good benefits, some may not. But I want you to know that if you absolutely don't have any benefits or any deductions, this is the baseline that you must take out from every single paycheck from an employee. Okay? These are the baselines. These are the things that are mandatory to take off. And you cannot get away with it unless you choose to defer if the employee chooses to defer their taxes, where they take the whole paycheck and pay taxes on their own, then that's going to be a completely different subject. But in this case, these are what you are going to be taking out of a individual's paycheck, okay? Now, with that being said, we also have to calculate what the company is going to be taking out for their taxes for having employees. And the first one is going to be company FICA. So again, we know what FICA is. We know that it's Social Security, and we know that it's Medicare. And if not, most companies they are required to match 100% of whatever is taken out of the employee's paycheck. You have to take out and match 100%. So in this case, let's look back at our example here, where we talked about L. L, again, is an employee that worked a total of 45 hours, I remember, and she received $16.25, something like that. So her grand total that she made is $686.25. Now, again, how we calculate FICA is going to be based off of the gross earnings, meaning the actual amount that she earned, not after deductions, not the gross pay after the deductions. It's going to be what she earned. So total earned income, which is $886.25, is the number you're going to use to calculate FICA. Now, here you have an option there. You can separate the two, but in this case, I want you to just combine them. It depends on who your accountant is, if they want to separate them so they can pay Social Security separately and pay Medicare separately. But in this case, I want you to just understand you can also just add them together and place them all in one section, because either way, this money that you're going to calculate and collect is going to go straight to the federal government anyways. So in this case, we can just only calculate company FICA one time. And so we know that Social Security is 6.2%, and we know that Medicare is 1.45%. So when we add them together and combine them, it's going to be 7.65%. And you can just take that total and you can just apply it to the gross earnings, the total earnings, and you get a total of $52.50. Now again, what you can do too is, instead of having to calculate this amount twice, you can just go up to your previous journal, right? Since we've already calculated what Social Security was and we calculated what Medicare was, you can just simply add them together, and instead of have to recalculate, that is your total amount. Okay, so whatever the employee contributes to their FICA, you as an employer is going to match them 100%. Okay, so $42.55 plus $9.95 gives you $52.50. All right, and that's the first thing that you're going to recognize when calculating taxes for having employees. All right, so the next one here is, of course, depending on what state you belong to, and of course, as a federal, like a federal tax, you must pay into the Federal Unemployment Tax Act. Now, don't confuse this because a lot of people think that this is the case. They all, I don't know if you've heard this, but many people, workers, employees, they complain all the time saying that they pay into the federal unemployment tax. That is not true. You don't pay a dime to the federal unemployment tax. The company is responsible to pay for you for unemployment tax. So if you ever get into a fumble where your company is not willing to file unemployment for you because you are required to have proof that you have to get your W-2 form from your company to prove that you either are unemployed due to a situation or you were fired. You do need to have your company provide that information for you. And again, you do not pay actual money into the federal unemployment. The company is responsible for that. And because the company is responsible for it, it can be anywhere from 0 to 0.5% or all the way up to 6%, depending on how much employees they have and how much tax they owe. And we'll talk about that when we reach the last step, which is to start paying for those taxes. So with that being said, it could be anywhere from 0.5% to 6%. All right, and again, it's going to be filed under the Form 940. So this is a separate federal unemployment tax that the company is responsible to pay for. Okay, so with that being said, for the sake of this class, I am not going to test you on random percentages. I'm going to test you on just 6%, the highest one, okay? Because again, it depends on your company. It depends on how many employees you have and how much you owe in taxes, okay? So for this class, only know 6%. All right? And we'll talk about that, about calculating that. So you're going to be calculating it based on, again, on gross, not gross, the total earnable income. Okay? All right. And then for every state's going to have their own unemployment tax act. Not every state is required to have a state unemployment act. It depends on what state you belong to. And in this case, we do have one in Nevada. It's different terminology, but it's essentially the same thing. In Nevada, we call it the state unemployment insurance, okay, in the state of Nevada, okay? But it's essentially the same thing. It is where the company has to pay into the state. So that's where, again, Dieter takes care of the money for this, right? So for this one, the company can be charged anywhere from 0.25% all the way up to 5.4%. And then if you go to the actual Nevada State little web page, it actually gives you a little FYI saying that if you are a new business, you are mandated to start your rate off at exactly 3%. All right. So with that being said, I'm going to test you for state unemployment insurance, or also known as SUTA, I'm going to test you at 3% because, again, at this beginning level of accounting, the whole purpose of us doing this is to be part of a small business. So you're going to be part of either the beginning of a business or et cetera, et cetera. Okay, so I'm going to assume and start you guys off at 3%. So one thing to know about calculating federal and state is 6% for federal, 3% for state. Okay, and again, this will also be based off of total earned income. Okay. Last thing that you can also do payroll taxes for is going to be things like workers' comp, okay? Holiday pay, vacation pay, sick pay, all of those are going to be additionals or extra things that you may have to calculate for. So, of course, with holiday pay, right, depending on your company, do they offer holiday pay? Do they offer vacation pay? So those things are going to be other payroll taxes that you may have to charge for, right? Because these are not part of your regular salaries or wages. It's going to be considered a separate payable. So things like that. Now, of course, I'm not going to test you on anything that is extra except for workers' compensation. Okay? Now, with workers' compensation, right? What it is it's actually a legal protection for the company. All right? Especially when a job can have the potential risk to have employees get injured at the job, right? And then the worst thing is that if an employee does get injured on the job, they can come back and sue the company. So this is exactly what a workers' compensation for. It's basically a protection act for if and when the employee does get injured on the job, the company saved a portion of the money to be able to pay their medical bills and also maybe pay them for training to get another job in a different field. All right, and that's what this is. This is just a legal obligation that they want to protect themselves, okay? Because, again, if the employee decides to sue the company, they can sue for a larger portion of money. And, of course, with companies that have other employees that they need to pay for, it's not something that you want to get yourself into. So that is why we want to make sure that, okay, if this employee is going to be working for me, I'm going to make sure that I pay at least 1.36% to workers' compensation for if and when that day happens and they get injured on the job. So again, it is a protection for us. So we're going to calculate 1.36% based off on the individual's total earned income. All right. So with that being said, let's go ahead and calculate this for us. So first things first that we learned was we have to deal with FICA. All right. FICA. Okay. So all of these taxes are going to be all based off of the total earned income. So here FICA, we know it's 7.65%, which we've already calculated from the previous one to be a total of $52.50. All right. Then the next one that we looked at is SUTA. SUTA, we're only going to be calculating 6%. So that gives us a total of $41.18. Then with SUTA, right, I'm not going to do SUI because it depends on what state you're in. So the general one is going to be SUTA, and that's going to be 3%. So which gives us a total of $20.59. And then lastly, we're going to calculate our workers' compensation to be a total of $9.33. All right. And then lastly, we're going to place all of that in one account called payroll tax expense. Right? These are things that we need to take care of. However, everything that we have, whether it's FICA, FUTA, SUTA, or workers' compensation, right? There are certain agencies that we need to pay, and they don't require us to pay right away. And we'll talk about that in the next section. So with that being said, FICA, we're going to owe the money. We're going to hold on to it until we reach the date where we need to make a payment. All right, to the correlated or the associated agencies that are to collect this money from us. So here we have FICA, we have FUTA, we have SUTA, and we have workers' comp, giving us a total of taxes to pay for having L is going to be $123.60. So yes, these are all obligations to calculate the taxes that you need to pay for having employees. So not only do you owe a $686, you also owe an additional $123 per employee. And of course, it's going to be based on how much you pay your employees, etc., etc. So you can imagine for having one employee, you have to pay almost $150, $125 for just having them work for you. Okay. So any questions in how to calculate the company's section on their taxes? Okay. Okay. All right. So we will talk about, well, what happens when we need to make payments to the government. So again, depending on obviously the federal, right? You have certain agencies that collect that kind of money for you. Same thing with state, right? There's an actual state agency or a local county agency that collects this money for you for the state, okay? And you need to make sure that you get it connected to the correct correct agencies. All right. You can definitely, when you file your tax forms to the IRS, they'll tell you exactly which agency that you need to go to, and you just write them a paycheck. But make sure that you do the correct calculations for that. And again, once you get audited at the end of the year, they will determine to you, did you pay enough? Did you pay less? Etc. etc. Now, again, with this, on the actual 940 form and the W4 form for the companies, they usually tell you that your payment should be done on January 31st, okay? But there's also rules and guidelines on, especially when you're a smaller company, you actually have freedom and you actually have a little more flexibility when it comes to making payments to either the federal or the state. As a small organization, your little flexibility is you don't have to pay every week. You may have to pay either monthly or even you can even get away with by doing it quarterly. All right. However, for major corporations that employ many employees, they are subject to either have to pay every month, every week, or even every few days. Okay? Because again, think about it. If you have a major corporation that employs thousands of employees, right? And their tax dollars can be the easiest to collect because it's the most money. It makes sense to go after the major corporations first. Then the smaller businesses, right, that don't have that many employees, they don't accrue that much taxes. So it makes sense, right, that the smaller companies get that, that easy leniency where they don't have to pay so often. And plus, they're a small company. They can afford it if they do the correct calculations. But then again, it's also based on is this expense something that they can pay? Do they actually have enough money to pay? So that's also one of the fine lines when you're doing business, especially establishing at a small business. Okay. Again, it also it depends on a couple criterias. How many employees do you have, right? If you have if you have one or two employees, then you may be able to pay the taxes towards either the end of the quarter, okay? But if you have maybe 20 employees, then you may have to pay every month, depending on how many employees you have. Second of all, it also depends on how often you pay your employees. If you pay them on a daily basis, it might be something that you maybe want to consider. Now, the number one thing that you don't want to do is you don't want to defer your payment as long as possible, because at the end of the day, right? It's just like thinking about in a personal situation. You can pay your employees, but the more that you wait to pay the government, the more bigger of a bill or a liability you have accrued, and therefore you need to save a chunk of money to just pay it off in one go. So what they usually recommend is if you have a pay period, if you're bi-weekly, you usually pay the off weeks that you don't have payroll week, meaning if you're distributing paychecks every 2 weeks, the off week, right, that you don't have paychecks, you usually pay your tax liabilities. That is the best way to do. That's the best way, and you're going to get better credit with the IRS and less likely to get audited if you do your responsibilities and pay off all the tax liabilities in a timely manner. That's the best way to do it. Okay, and usually that could be since it's your off week when you're not making a payment to your employees, you're making a payment to the government. Yes, so again, less likely to get audited. Okay, and that's the best way to manage your bills. Okay, but again, this literally all depends on how the size of your company, how much money you owe, and how many employees you actually have is going to determine when you need to pay. So you have choices between annually, quarterly, monthly, or even semi-weekly, or bi-weekly, or semi-monthly, Okay? So that's just that little thing again. When you report to IRS, they should give you the full details in your outline for this. So yes. So let's go ahead and do chapter review. Again, we got to take a look at the different types of employees. Again, under payroll, all you need to know is your common law and your statutory employees. Everybody else is going to be considered expenses. Okay. We also talked about important forms such as applying for a employer identification number, distributing W-2 forms, whether it's your company that's reporting to the Department of Employment, or whether it's your actual employees, their tax returns. And then also W-4 forms for individuals who are applying for your job that have the job. You want to make sure that you get properly taxed at an individual level. Other things that we have talked about was a 1099 form and how we pay our taxes, which is usually the 940 form. Okay, there's a bunch of other forms out there. You just have to go visit irs.gov, and when you apply for your business, they usually help you out. You may need to pay a professional tax accountant to be able to help you file taxes for your company if it's your first time. Okay. So again, if you want to learn more, irs.gov, publication 15 is all about employees and the whole payroll process. Okay. So things that we looked at is going to be the employees' payment, right? Payroll, right? You need to know how much income they made, how much federal income tax is calculated, and their FICA tax. All right, so federal income is where we learned the percentage method. And Yes, and we know that when we use the percentage method, we're going to be using the circular E table, which is provided. Okay? And we also know that FICA tax is going to be 6.2% and 1.45%, which consists of both Social Security and Medicare. We also talked about other ones, employers' taxes, so FICA, FUTA, and SUTA, and workers' comp. We know that FICA is down here. It's the same exactly as employees. FUTA is 6%. SUTA is going to be 3%. Okay. And then last, here's a little section here where I demonstrate to you how to use the percentage method, okay, and how to calculate the percentage method, all right, for the federal income tax withholdings. And then lastly, these are what the journals should look like when you accrue or when you start paying your employees, okay? Especially employees, these are how the journal should look like. And then employer taxes is the bottom one, okay? Any questions in regards to pay? Okay. Exactly. And that's what I was going to actually, yes, I am actually, yes. So if you, exactly, and that's exactly what I was going to tell you right now is we have people who do this stuff for you, okay? You don't need to do any work. All you got to do is submit what the person, what kind of hours they clocked in, or if their salary, and that's all you have to do. We have people who actually do this. However, I just want to expose to you on actually how it goes. Yes, because imagine. Exactly. Mhm. Mhm. Nice. Yes. Okay. Yes. Yes. Okay. So, yes, we do have professional people who actually are in the sector who actually do these for you. You don't have to really do much. But yeah, but imagine, think about it. If your company is 20 employees, every individual employee has a different case. One might claim 2 children, one might claim 0, one might be married, one might, claim themselves. So every single case is different. So you have to treat it as different, and you're gonna have to calculate not only their taxes, you have to calculate their also how many taxes you have to pay for having them as an employee. And then you have to separate them. Where are they wages or are they salary? Then you have to also think about, well, which one are part-time, which one are full-time, which one get these benefits and which one don't. So again, that's exactly why companies pay the big people to just do it for them, because this is extra work, and whoever the HR is would probably be pulling their hairs out, especially if the company has like 100 employees. So, and we'll talk about that when we move into QuickBooks, because exciting thing about QuickBooks is they actually have a program, or they actually have a supplementary program that can actually calculate the payroll for you. You don't have to do anything. All right, so with that being said, let's go ahead and dive right into the exercise. So here you go, chapter 12 payroll exercise. Okay, and let's get started. So question number 1. Okay, now we're going to do employee first. Okay, so Bob is a married man with 3 dependents. Okay, now Bob may be married, but he doesn't have to claim as filing taxes with his wife. He can claim, he doesn't have to get an allowance for that. But no matter what, his status is still married. Okay? And he has a separate, and he files separately from his wife. So there you go. Okay, and he earns $16.50 per hour, and he worked a total of 36 hours. Okay, this week. All right, the payroll period is weekly. Use the table below to answer the next question. So the first one is, well, let's see what the total number of withholdings is. So if he's a weekly payroll period, that means every dependent he claims is going to be a total of $83 per withholding or per allowance, okay? Make sure you understand that allowance is the same thing as a withholding. So with that being said, let's go ahead and calculate this. Number 1, solve for Bob's federal income tax withholdings. Okay, so what's the first thing we gotta do? Yes. Okay, so 1650 times 36 hours, and what do we get? So he made a total earned income of $594. Now the next thing is we got to calculate the total number of withholdings he is claiming. So in this case, he's not claiming, obviously he filed taxes separately from his wife, so he only has 3 dependents. Correct. So 249. All right? So then the next step is now we got to calculate his total taxable income or his gross income. And what do we get? What's his total? Okay, good. Okay. Okay, good. So now the next step is, now that we have his total taxable income, so now we got to go to our circular E table. So of course I provided the correct table for you guys. So here's the weekly payroll period under married status. So with that being said, which bracket does he belong to? Okay. Did he earn more than $0? Good. Good, because he only made $345. So that's definitely more than 229, but that's definitely less than 609. So that means the bracket we belong to is going to be the second one. And if we follow across, we see that he's going to get automatically taxed at 0. So the federal government's not going to claim anything extra or anything. And he's going to get taxed at 10%, and the government's going to let him keep an additional $229. So that's why I talked about this earlier. Like, I don't understand why they set up the table like this. It'd be easier if they told you, well, how much does the government let you keep? And then in excess, how much you're going to charge? And then lastly, how much tax are you actually going to take out no matter how much I made? So in this case, we're going to do steps E, D, then C. Okay, so we're going to work backwards. So the first thing is we're going to take out $229 because that's how much the government is going to let us keep. Correct. Okay. So we're going to take that directly out of the 345. So 345 is his total taxable income, and the government gets to let us keep 229. So what is my total amount here? 100, yes. Okay, 116. Now this is how much money he made in excess. Okay, apart from how much the government lets him keep. So that means this is going to be taxed an additional 10%. So this is where we got to multiply it by our bracket, which was the second one, which is 10%. So what is 10% of 116? $11.60. And then on top of that, there's no additional cash or additional charge, regardless of how much he made. He gets nothing else extra taken out. So in this case, we add pretty much 0, right? To get us a total of $11.60. So that's his total federal income tax withholdings. Okay. So then number 2 says, okay, solve for Bob's FICA tax, okay, which is, I put in parentheses, Social Security and Medicare. So Social Security, also known as OASDI, what is the percentage of this? $6.2%. Okay, so again, in order to solve for this, it's going to be based on total earned income. So how much did he actually made in total? Yes, we're going off of total earned income, not gross. So we're going to get the 594. So 5. Okay, so for this one, we are definitely going to round. Okay, so $36. They want their money, exactly. So can't be cheating the government by a penny. So in this case, it's going to be for a total of $36.83. How much is Medicare worth? What percentage is Medicare? Yes, 1.45%. And again, it's going to be based off total earned income. So 594. So what's my total Medicare that needs to be taken out of Bob's paycheck? $8.61. Okay. Now, lastly, let's go ahead and figure out how much is Bob's paycheck going to be. So, okay. No worries. Okay. So here we're gonna journalize Bob's payroll expenses. So, all right. Correct. Good. That's how much he earned. Okay, that's how much he earned from the company. Was a total of $594, right? However, he's subject to all these taxes. So what are my taxes that I have to collect for Bob? Oh, you want to, okay, fine. You can separate them. That's completely fine. But in this case, remember, we need to pay it separate for Bob because, again, this is Bob contributing to his separate FICA. And yes, so we need to make sure that we segregate a section that actually goes to Social Security and a section that actually belongs to Medicare. Whereas a company, we can just distribute the whole amount. All right. But for Bob, we want to make sure that, because there's a cap to how much Social Security you can collect. So we want to make sure that when he caps it, that's how much contribution he's going to have for his Social Security. So we need to make sure it's separate. For this case, you need to separate it. Okay. Correct. FITW for short. But I'm gonna do FITW. So federal income tax withholdings. All right, and how much did we calculate that from question number 1? Correct, $11.60. Okay. All right. How much Social Security did Bob contribute to his own Social Security? Yes, the $36.83. And then lastly, how much Medicare did we? $8.61. And so then lastly, what do we have to do? Okay, and what is that going to be? No worries. Okay. What is this last thing that you're calculating? $536 and what? 536.96. All right, and what is that? Okay, and what do you do with that net? How do you pay him? Yes, you're gonna give him a paycheck. So checking, that means the total amount of money he's taking home is going to be $536. Okay, so good for Bob. Yay, Bob. But he may, depending on how much he makes and how much stuff like that, he may have to pay at the end of the year because he's claiming the 3 children now. Okay. So employer, okay, so now that we have Bob's paycheck and we calculated his taxes, now it's our responsibility to pay for the company FICA for Mr. Bob, okay, based on Bob's earnings. So how much how much company FICA am I going to be charging based on Bob's income? $45.44. How did you come up with that number? Good. So you should have got 40. Yeah, 45, 44, okay? Again, so again, you could have done that way. Yes. You could also have done his his total earned income times the 7.65%. That's just another way. Like I said, because we've already solved it from above, you could have just added those two numbers together, and that would have been completely fine. You could have just added the 36, what was it? 36.83 plus the $8.61, and we would have gotten 45.44. Okay, good. Now solve for federal unemployment tax based on Bob's earnings. $11.60. Where did you get that number from? Now remember, federal income tax withholdings and federal unemployment are two separate things. Yes. So how did you solve for that? Good, right? In this class, I only want you to know that FUTA is the 6%. So, I'm sorry, what was the answer again, Michelle? $35.64. Okay, so we took 594 multiplied by the 6% to get us this number here. Okay. Now we also need to solve for the state. I don't know why I put state federal. It's just state unemployment tax. Okay. Okay. And how did you solve for that? Good. That's also another shortcut too. Instead of doing by 3%, you could have just taken the previous one and just divided by 2. Okay, because it's 3%, which is half of what you should have done before. So what was it again? I'm sorry. 82. Good. Right. Lastly, solve for workers' compensation. Right. So let's solve for workers' compensation. Okay, so how did you solve for that? Good. And you got $8.06? 808. Perfect. Okay. So workers' compensation is $8.08. Okay. Right. So last question here is to generalize the company's payroll tax liabilities. Okay.
Yes. I'll just do the 5.
Okay, yeah. No worries. This is your exercise. Correct. Correct. Hundred and let me see, 45 plus 36. Correct. All right, so again, what was the journal again? You said payroll tax expense for 106.98. All right, so what are the items that I owe? Yes, company FICA. Mm-hmm. Yes. $45.44. Mm-hmm. Federal Unemployment Tax Act. $35.64. Mm-hmm. Oh, something happened here. Suda. Okay. So how much was Suda again? 1782, and total was 808. Right? So yes, you just add them all up and you'll get your total payroll tax expenses or liabilities, whatever you want to call them. 106.98. Good. All right. So that's one example of how to calculate taxes for employee and also taxes for employer. So again, next section is going to be another example. So here we have Susan. Susan is a single woman with 0 withholdings, okay? She earns $25 an hour and I put that, and she, not he, and she worked a total of 80 hours, okay? This payroll period. Okay, this is pay period, okay? The payroll period is bi-weekly. So, question number 1 or question number 9 says, solve for Susan's federal income tax withholding. So the first thing you gotta do is so 25 times 80 gives you a total of $2,000 even. All right? Next thing we gotta do is calculate what? Okay, so you can. $177.56. Where did you get that category? Okay, so you completely skipped through. Okay. Okay, so yeah, so 0. Okay, so what I wanted to get you at is this the step-by-step process. So 0 times the I think 165. We looked at the chart on top. Okay, because we remember she doesn't have anything because it says 0 withholdings or 0 allowances. So yes, you are correct on that. Where you don't, since we already know that she claims 0, so you're basically subtracting 0. Okay, yes, that is fine. So therefore, our total that she is taxed at is going to be at $2,000. So with that $2,000, and then you said we belong in which brackets? She definitely made more than $16.89. All right, so she belongs into this bracket right here. So how much did the government let her keep? $16.89, leaving her with how much extra? $311. Yes. And how much percent, what percent in excess are you going to be taxing her at? 22%. Okay, give us a grand total of $68.42. Oh wait, hold on. Yeah, you're right. 311. All right, 68.42. All right, and then how much is the government going to charge her for tax regardless of the amount she made? Yep, 177.56. So you're gonna add that to 177.56. All right. And that's how you calculate the federal income tax withholdings. Now she only made $2,000, and look, she already has to pay $250 worth of income tax withholdings. Yep. Now that's not all. She has to also pay for her Social Security and her Medicare. So let's go ahead and calculate that. So 6.2% of her $2,000 check is going to be $124. All right. And then Medicare is going to be 1.45%. Okay. Good. No, not yet, not yet, not yet. Yeah, hang on. We're only doing the employees. Yeah, there's only 3. Okay. So let's go ahead and journalize Susan's paycheck. So what is our expense that we're going to incur? SAP. For 2. Correct. FITW. Payable of, which we calculated above here, which was a grand total of $245.98. $245.98. All right. And then how much Social Security did she contribute to her own? $124. And then lastly, how much Medicare did she actually contribute? All right, so how much is her actual paycheck going to be? $17.01 Michelle, did you get that same answer? All right. think the 16 is correct. 160102. Mm-hmm. Oh, remember, it's 124, not 24. All right. And no worries. So, you see that? Okay, she was a single woman with 0 withholdings, high paying job. She got $25 an hour. And look how much tax she has to pay. Okay? She earned a $2,000 and now she only walks away with $1,600. So she paid a total of almost almost $400 into taxes. And think about it. Mm-hmm. And yeah, exactly. Mm-hmm. 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 So yes. So that's a typical person right there. Lastly, let's go ahead and calculate how much employer taxes we have to pay for her. Okay. So let's calculate company FICA. 124 plus 29. 153. All right. How much FUTA do we need to charge? Okay. And how much SUTA do we have to pay? $60. Okay. And then lastly, how much workers' comp does the company have to pay for her? $1.36. Yep. Did you say $23.20? 27.20. All right. Okay, so now journalize Susan's taxes that we have to pay for her. So, what am I gonna be expensing? Payroll tax expense. Okay. All right. So what is the first thing I'm going to pay for her? $360.20. All right. So first off, what is my total? What's the first thing I'm going to? Yes. Company for 153. All right. What's next? FUTA for how much? 120. How much was Suda? Yep. Suda payable was for $60. And lastly, workers' comp was how much? Compensation for $27.20. You add them up. See? So, of course, having Susan as an employee, therefore, we got to pay more for her. So, not only do we owe her $2,000, we also have to pay an additional $360 for having her as an employee. Yes. So, yay. And that is it for calculating payroll. Right? Any questions?